Hi and welcome. My name's Brad Maclean and I'm co-founder for Regulation Asia. In November, SGX was recognised as the Exchange of the Year in the Regulation Asia Awards for Excellence 2019. Today I'm here with Boon Gin Tan, Chief Executive Officer of SGX RegCo, to discuss his insights and thoughts on the challenges in the year to come. Boon Gin, as a starting point, can you quickly speak to the core challenges and overall risk factors you see in the region?
I think that what we are seeing is that there's going to be a lot more uncertainty going forward, and also the pace of change. It's going to be very rapid, and companies need to be able to focus on their long-term strategy in order to address this. And this brings us to the question of quarterly reporting, and whether or not companies should be able to move to semi-annual reporting so as to be able to focus on the long term. Now, what we have right now is size-based quarterly reporting. In other words, bigger companies have to do quarterly reporting, or QR for short, and smaller companies don't. So the feedback that we got from the market was that this distinction is not very meaningful because it does not target the companies that we want to do quarterly reporting. It does not target the companies that should be doing quarterly reporting. There is also an international shift away from quarterly reporting so that companies are able to focus on the long term. For these reasons, we have decided to move from a size-based approach to a risk-based approach for quarterly reporting. And this will allow companies in general to be able to focus on the long term, except for high-risk companies. So for high-risk companies, they are the ones that will need to continue to do quarterly reporting, and this will include companies that have modified audit opinions, companies that have going concern issues, as well as regulatory issues.
SGX has been recognised for its targeted approach to market regulation and for demonstrating a commitment to the moving from an ecosystem-based approach to that of a community. Can you walk me through your view on the shared purpose and common goals the exchange has with market participants and other stakeholders?
So the reason why we distinguish between an ecosystem and a community is because an ecosystem is really an interconnected series of food chains, whereas a community has a shared purpose and a common goal, which in our case is to preserve the trust and integrity in the capital markets. So what we really need is for everyone in the community to step up, every single stakeholder in the community to raise their standards, and we have been partnering them in doing so. And so let me just give a few examples. So we partnered with the Securities Investors Association of Singapore, as well as the Singapore Institute of Directors, to come up with an AGM guide to set out the rules of engagement between shareholders and directors so that both parties are able to extract the most out of an AGM. And we have also come out with an anti-insider trading guide together with our lawyers, together with our bankers, together with our auditors, as well as directors, so as to be able to tackle insider trading further upstream. I should explain that insider trading really is an information offense. You need to prove that passing of information has taken place. And this is something that is not easy to prove because it takes place in private and it does not show up on any of our platforms. So it is crucial for us to be able to tackle this upstream at the point of origination.
SGX has continued to demonstrate a willingness to partner with the industry and to raise standards. From your perspective, will these types of partnerships continue to be a focus in 2020?
Yes, very much so. In fact, we have been publishing a series of partnerships, including partnerships with the Association of Banks in Singapore. What we do currently with them right now is we jointly develop a set of guidelines called the ABS Guidelines for Due Diligence that is to be conducted in IPOs, and that is something that we will be doing in 2020. We are also working very closely with valuers. So valuers play a very important part in our market, especially property valuers, because we have a very big REIT market. So what we are doing in that space is to work with them to be able to come up with a set of minimum requirements and standards for property valuers as well as for valuation reports.
The SGX introduced mandatory sustainability reportings for listing companies in 2016. More recently, the IMS survey has indicated that ESG is a major theme for investment managers in Singapore in the coming year. From your perspective, do you have any other planned initiatives around ESG in 2020?
So, as you mentioned, we mandated sustainability reporting a few years back, and we have now collected the first complete batch of sustainability reports from our listed companies. And what we have done is to analyze these reports and come up with a report as to the state of compliance with our sustainability reporting requirements. And also, we plan to issue individual scorecards to the companies so as to let them know how well they've done and in what areas they could improve. Now, what we have observed is that while we have a mandatory reporting framework, what we don't have is a mandatory reporting format. So, because we don't have a mandatory reporting format, we observe that in terms of what is being reported, we do see a number of activities being reported instead of metrics. And we also feel that the link between the sustainability reporting and the business performance of the company is not very clear. And also, the information that is being produced is not very comparable, so it's not very useful to investors. So what we plan to do this year is to engage with our investors to see how we can bridge this gap between the mandatory reporting framework and the reporting formats that we see out there that are voluntary in nature, but actually do a much better job in terms of what I just described.
With that, Boon Gin, congratulations to you and your team, and thank you very much for your insights today.
Thank you.
Thank you.